Okay, welcome back everyone to another weekly webinar where we take a look at the market live. Just a quick sound check. Okay, sound seems to be good. We're going to start with general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature as the information or advice given does not take into account your particular objectives, financial situation or needs. Therefore, at all times you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products, thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so how's everyone? How's your trading the past 2 weeks? It's been a crazy month. Very interesting week. But before we begin, there's a couple of announcements that I need to make. I think this is going to be our live Outlook sessions in English for a good while. We are switching to educational contents for Wednesdays starting from next week. We are actually going to start with understanding momentum to begin with. That will be next week. I think that's really important to kick it off. So we're going to start with that. And also, just to let you guys know that I actually do lead a Telegram channel that provide content in 2 languages. Contents are going to be posted in Bahasa and also in English. And there's also going to be a special sessions that we are going to conduct starting next week on Monday, only for those that are in the Telegram channel. Okay, so making it a little bit more exclusive there. So for those that are in the Telegram channel, waiting for webinars to be done in languages other than English, we are going to start that again next week. Okay, so if you guys have any requests or any questions to look at for tonight, do type it into the chart. But I think the first one we need to take a look into it's I think the overall market, the Euro USD, the Pound USD, the Aussie USD was affected. There was a big slide in the Euro the past 2 hours. I'm unable to pinpoint the exact cause of it, but the only news that we have is that we'll talk about the UK CPI in a minute, but there was concern about the gas supply being cut off or reduced starting tomorrow. I think I put it out on the Outlook. There was concern about the Nord Stream that was under maintenance. That's going to get reopened tomorrow. But I think Russia is going to cut back on the supply side. So the Eurozone is currently going into their backup plan into what they're going to do if there's actually reduced supply in natural gas. Now, Germany is obviously going to get affected. The Euro is going to get affected. Let's also talk about the ECB tomorrow, potentially hiking by 50 basis points instead of 25 basis points. But right now, we are scheduled for 25 basis points. There's potential for 50. Might or might not happen. But I think that the concern with the Nord Stream, there's a lot more concern going on there because we had political turmoil in Italy as well. But I think Draghi is probably going to stay. So that doesn't really fit into the equation on what happened 2 hours ago, why there was a slide in the Euro USD. At least from the fundamental side of things, but from a technical perspective, we kind of expect this to happen because we're eyeing for resistance at around 1.25. So, bad. Okay, so Daniel had a good question. How do I trade the market when it's actually like this? When there's no clear sign when there's no clear sign to trade? There are a couple of clear signs that I actually posted out on the Telegram channel on Monday. I believe that on the Euro USD, where we're kind of expecting a little bit of a correction to the upside with the limit at 1.025. That came to fruition. It kind of stopped at 1.025. But if you're unsure about your trading, I don't know what you're looking at. I don't know what time frame you're trading. But if you're not sure, if market is creating uncertainty for you, for yourself, you're not sure about what position to take, being sidelined, it's also a type of position. It's okay for traders to be sidelined. It's okay for traders to actually take a little bit of a break if market is uncertain. Just stay on the sideline until you are actually certain on what you want to do, because there's no point forcing yourself into a trade if you're not sure what's going to happen, if you're not sure about your analysis, how is it going to work out, and stuff like that. So it's okay to be on the sideline if you're not sure about things. Okay. So let's jump in quickly into the Euro USD. Let's take what's going on with the whole situation with the Euro USD. Just to warn you, we have transitioned below the daily pivot on the Euro USD. We do have a resistance at 1.025, so keeping an eye out on 1.025. Okay, this will be your limit for the day. If you're planning to go short, make sure your stop losses are at least beyond this high here, so that would actually put it closer to 1.0275. And I think it's okay to give it a little bit more room for the euro if you're planning to go short. Just be mindful if you are planning to go short. We have transitioned inside the Ichimoku cloud, so there's going to be turbulence ahead. I think if we maintain a position closer to between 1.0150 to 1.02, we are going to be stuck in the Ichimoku cloud, and that's basically pretty much between support 1 and pivot. Okay, so I'm not really expecting anything anything conclusive at this point in time in terms of resistance to the upside. We do have strong resistance at 1.025. So if you have a long position, I think it's a great time to get out around 1.025. In terms of the correction, I think it's nearly done, at least on the 4-hourly time frame. It's nearly done. In terms of divergences that's showing up right now, there's actually a class B bearish divergence. I believe this is actually a double top around 1.0270. So be mindful, there's actually a slight divergence that's currently being formed, but it's actually class B, so it's not going to be a quick swing or a quick turnaround. So intraday traders, if you are planning to go short on Euro USD, make sure your stop losses are at 1.0275. Okay, risk reward ratio, you are still going to go by this Fibonacci here. Okay, we are actually support around 61.8% where the bounce is happening. If we do break below support 1, if we do transition below 1.0150, then you can adjust your target towards 127.2, and that's still going to be okay because we're not even targeting parity for the Euro USD. Right now, if you are planning to go short, we actually did close below 1.02, at least on the early time frame. That would be that. 78.6 is going to be your immediate target, or if you want to target support 1 at 1.0140, that's fine, but I would prefer 1.0150. Risk reward ratio is not going to be that great, but this is the risk that you kind of have to pick up initially. Once this one goes below 1.0150, then short trade can be adjusted lower. You can actually have your stop loss the same, but in terms of target, you could be targeting 1.01 or 1.0075. Okay, that one that has a much better risk reward ratio, but again, for that to happen, it needs to transition below the Ichimoku cloud. So you're dealing with the Ichimoku cloud right now on the hourly time frame right now. Okay. Also, about the Telegram channel, for those that haven't joined into the Telegram channel, there's going to be a link that's going to get posted by the admin on chat on how to actually join the channel. But if you're not part of the channel yet and you do want to join in, or maybe you're watching this on a later session, to click on the link that's going to be given out by on the chat there. So that would help out. Okay, so Euro USD. Right now, it's the overall tone. It's still bearish. Let me just get rid of the pivot. So let me just give you the much bigger picture on the Euro USD. Oops. Okay, so if we ignore the stochastics on the daily, if you take a look at the whole price movement on the daily here with the Euro USD, it's still a strong downtrend. So be mindful of what you're dealing here. We actually haven't tested anything much. If we do break above 1.0250, then we're likely going to test at 103, 103.50. But that again probably wouldn't happen today. The 4-hourly time frame is the stochastics itself has already transitioned below the 80. So we are actually going to be looking at a potential for downtrend continuation to happen on the Euro USD. So be mindful. I don't like going short the US dollar. We did talk about a little bit of a technical correction in the first half of the week during the outlook. So I think we have seen that correction happen. So if we do see that transition tonight, if we break lower tonight, despite tomorrow being ECB announcing potential hikes and whatnot, we are still going to be looking at a strong downtrend that's likely going to persist in the Euro USD. Okay. On progress earnings Swiss yen, daily swing to long. Do you review? Sure, I'll review it. I think we are quite clear with the Euro USD. I'm okay with Euro USD going short, but initial risk has to be about 70 pips. I think that's kind of the risk that you need to take. You can transition this into a swing trade. If it does break below 1.0150 on the hourly time frame, I think that would be a relief. At this point in time, I'm not going to be looking for a long. I just don't have any indication from the momentum side, and especially we just transition below the pivot level, so we are likely going to be attracted towards the support level rather than the resistance one for the Euro USD. Okay, all good with the Euro USD. Next up, it's Pound USD. Let's talk about Pound USD. Very similar situation. We do have one FIB that that's still in use right now. This is also within the Ichimoku cloud, so there's a lot of uncertainty going on tonight. So if you rely on your analysis by, if you analyze the market using Ichimoku Kinko here, you are probably going to stay away from the market today. We are transitioning within the Ichimoku cloud. The drop 2 hours ago, that was pretty big. It's actually close to about 65 to 70 pips. So just keep in mind on what's going on here. Okay, for Pound USD, we're still within this Ichimoku cloud. Within this FIB retracement. We are currently testing 61.8%. We do have a little bit of support coming in at 1.1950. That will be at 78.6%. But for the target to the downside, we are going to be looking at a return towards 1.19 on the Pound USD. So if you do have a short position, just make sure your stop losses are actually beyond 1.2050. In terms of target level, you could be aiming for 127.2. That would be around 1.19. Risk reward ratio is going to be about 1-to-1. So you're probably looking at about 70 up, 70 down for Pound USD. UK, let's talk a little bit more about UK. We have the year-on-year CPI number. I know you guys are probably confused. Sorry, I'm just sweating right now. If you guys are probably confused with the CPI numbers that was out for the UK, let me break it down. The previous number was 9.1%. I believe the expectation was 9.3%. The number posted was 9.4%. That was a huge, not a huge jump. It's actually 0.1% jump. But the core CPI number The expected forecast was 5.8%. We got 5.8%. The core CPI was actually lower. The CPI number was higher. The core CPI, so X oil and whatever not, X auto and oil, that's actually 5.8%. It actually fell. So it's kind of 50-50. In one side, we got the general headline inflation going up, but the core inflation is actually shrinking for the pound US, for the UK. The expectation for Bank of England was that they are likely going to hike by 50 basis points. That was up from 25 basis points previously. So Bank of England is the next meeting. They're likely going to hike to they're going to hike 50 basis points during the next meeting. So that's for the UK. Now, the core CPI this time around is actually really important because we are actually looking at an inflation that's actually coming down for the UK side of things. Bank of England will still hike, but pressure is on for pound USD right now to the downside, at least on the hourly time frame. Momentum still points to the downside. The only concern that I have would be just from the Ichimoku cloud. But if you don't trade with the Ichimoku cloud, then we are looking at a potential move to the downside to test 1.19 for pound USD. We do have the momentum for that for pound USD. Now, with the general outlook on pound USD on the daily, this was brought up during the outlook. There's actually resistance at 1.2 to 1.2050. We have seen that test level tested for 3 days, Monday, Tuesday, and Wednesday. We haven't actually had a daily close above 1.2. So if you are thinking this is going to be a strong resistance, now my note was that we are likely going to drift lower, but more in a more choppy market. So it's not going to be like one quick drop to the downside. It's actually going to be range bound. Now in terms of range, we are looking at a return towards 1.19. 1.19, by the way, is basically the weekly pivot for pound USD. So right now, if you're planning to go short, do so. Just make sure your stop losses are above 1.2050. You can be targeting 1.19 where the pivot is. If it does break below 1.19, then it could transition lower towards 1.18 on the lower side for pound USD. So in terms of pound USD, again, the 4-hourly time frame it's actually turning around. We haven't posted a new high for pound USD, but if I zoom out a little bit and taking a look at the 4-hourly time frame, there's actually a slight divergence. There's actually a lower high, but the stochastic is actually creating a higher high in comparison. So there's actually a slight hidden bearish divergence on the pound USD on the 4-hourly time frame. So that gives you more reason to be short than to go long pound USD. I think we are at the upper range on the pound USD for the week. So think about it. We've got a range. We tested resistance 1.2, which is a strong psychological level, as well as a key resistance level for pound USD. We basically failed that level for 3 days, so I much prefer to go short pound USD than go long on pound USD. Okay. Pivot setting is traditional. I always rely on traditional pivot setting. I don't use fib pivots. I have my fibs to do my fibs, but my pivots are going to be traditional. Unable to use Ichimoku clock, can it be useful in trading? It's very useful. I don't look at charts, or I don't trade without using Ichimoku. So I think Ichimoku and fib, both of this has been part of my trading for a good 15 years now. We can talk about Ichimoku in the upcoming webinars, because starting from next week, for those that just join in, or just if you just skip to the middle and you're here, we are going to be doing more educational content for English language on Wednesday. So we are actually putting a stop on the market outlook on Wednesday. We are transitioning into educational content just to get everyone up and running. So we are going to talk about a lot of stuff, Ichimoku included. So we'll discuss Ichimoku in later sessions in detail. But for those that are new to Ichimoku Kinko Hyo and you're wondering how to actually look at Ichimoku Kinko Hyo, I'll explain the simple method. If price is above the Ichimoku cloud, then it's likely to be in an uptrend. If price is within the Ichimoku cloud, it's going to be choppy and in a sideways market condition. If price transitions below the Ichimoku cloud, then it's likely to be in a downtrend. So that's the basic way of using the Ichimoku cloud. Obviously, Ichimoku Kinko Hyo is much more detailed. There's a lot more components to it. So it'll actually take a few sessions to get through the whole Ichimoku Kinko Hyo. Okay. If Fed raises the interest rate because of high inflation, Fed is already raising interest rate because of high inflation. Why is the sterling yen movement not volatile, just like the usual? There's a little bit of retracement going on this week, particularly this week. In terms of volatility, I think it's up for debate between the US dollar and the Japanese yen. I think the US dollar obviously took center stage with the CPI number at 9.1% last week. So that was basically the key driver in the market. So I think there's a lot more focus with the US dollar as safe haven rather than Japanese yen. Tomorrow, Bank of Japan is going to meet. Again, we don't expect anything new from Bank of Japan. They are likely going to maintain their monetary policy. So shouldn't be an issue. If they are dovish tomorrow, if they do remain dovish, I haven't taken a look at the yen crosses, but we will soon, and we'll take a look at that. Okay, so we're clear with the Euro USD and the Pound USD, and next up is the Dollar Yen, and we can take a look at the head and shoulder on the hourly time frame. Sorry, let me just zoom out a little bit and see what's going on here. I don't think there's a clear head and shoulder. I know what you're talking about. I think the neckline is a little bit off. It cannot be an inverse head and shoulder because it's in an uptrend. So there are two that you could probably identify as head and shoulder. The first one, I believe you're probably looking at an inverse head and shoulder. It will be this one. Yeah. This is actually not valid because we are in an uptrend. So this is not valid unless you are looking at it from, a 50 minutes perspective where it's actually in a downtrend. Then, it's kind of there. But generally, I wouldn't classify this as an inverted head and shoulder. The other head and shoulder that you could be looking at would probably be this, but the neckline is just too skewed for it to be a head and shoulder. I think the gap is just too big. We are looking at about 100 pip, a 1 yen gap. So I don't think it's a valid head and shoulder on the dollar yen. Okay. Right, so talking about the dollar yen, what's likely going to happen with the dollar yen? Let's take a look at it from the hourly perspective. If you look at it like that, it does look like an inverted head and shoulder, but I'll tell you what, it's not an inverted head and shoulder. So just let's be clear on that. Resistances. This is actually a little bit weird. I want to put it at 138.50, but it's just that we don't have too many hits on 138.50. If you want to classify this, it will probably fall between 138.30 to 138.25 as the resistance to keep an eye out on. Now, like the Euro USD and the Pound USD, where it's transitioning within the Ichimoku cloud, the dollar yen is also transitioning within the Ichimoku cloud. Now, let's talk a little bit more about the Ichimoku. The stochastics. We will talk about this more next week when we talk about momentum, but I want to touch on a little bit. Momentum is actually flat. It's actually hovering between 50 and 60, and it's within the Ishimoku cloud. So the momentum for the dollar yen, it's actually neutral at this point in time. So in terms of risk to the upside, I think what we're looking for is actually a sustained close above 138.25, and that would be 25 pips above 138. We are actually within a zone where it's actually dangerous for you to take positions on the dollar yen. This is purely based on psychological level. So when we talk about psychology and price, we have the double zeros, the 25, and then the 75, right? So let me just draw that for you. So this would encompass the whole range. Now, if you take a look at the range between 138 to 138.25, that would be where the resistance cluster is for this week. So there's actually a little bit of a potential resistance building up right now. If it does break to the upside, it might come across as a potential inverted head and shoulder to you. It might, but it's purely just a coincidence. It's not an inverted head and shoulder at this point in time. I cannot classify this as an inverted head and shoulder just because we are technically still in an uptrend for the dollar yen. But we are looking at a little bit of a transition. So if we do have an hourly close above 138.25, ideally above 138.30, then I'm much prefer to be long the dollar yen rather than short dollar yen on the break above 138.50. I would have my stop loss below 137.75. In terms of target level, I would be eyeing for 139 and potentially 139.25. So the option is there for you. Just to be on the safe side, you can just be targeting 139 initially. If it does pick up above 138.30, it's still a good risk to reward ratio. We're looking at about 70 pips up, around 60 pips down. So yeah, this wouldn't classify as a inverted head and shoulder, but there's a potential for the dollar yen to break to the upside if it does close above 138.25. Can we use stochastics in higher time frame for trend direction? You can, but let me just bring it back again. We will talk more about this next week, but the stochastics, it actually measures the momentum. Now, when we talk about momentum, when it comes to stochastics, it measures the velocity, right? It measures the speed. In relation to price, I think RSI is probably a lot better if you want to use an oscillator as a trend identification tool. Stochastics for trends, I don't think it's a great idea. It's good for momentum, and it's only good for momentum. Now, let me just bring it up or give you a preview. Momentum does not track price exactly. Momentum tracks something else. We'll talk about that next week. Okay. A bit early. If you have a question, do type it in clearly instead of spamming in chat. I'm more than happy to help out. How can we identify a good entry? That's such a general question, but can you be more specific in there or an example? Well, I'll take a look at the others. So Euro USD, Pound USD, I'm probably more on the bearish side. The dollar yen, I'm more on the bullish side. And I'm just going through the chat to check on any requests. So we talk about euro, we talk about pound, EA, euro AUD, and sterling yen. We've got requests for Aussie pairs as well. So let's take a look at the Aussie pairs as well. So this is the Aussie USD. Let me just zoom out a little bit and clear off a few stuff because it's starting to get crowded. Okay, we're back above 68.50. Momentum points to the upside. We are still within a correction. We are not even at, I think we are at 50%. Sorry, just double checking. We are 61.8% on the daily. That's okay. We'll switch to the hourly time frame. So for Aussie USD, just be a little bit more cautious with Aussie USD. The Aussie does rally up, and one of the few reasons the Aussie rally up is because the RBA meeting minutes on Tuesday was a little bit more hawkish than expected. The RBA is likely going to be hiking interest rate a lot more going forward into the future. But with the Aussie USD, the range actually widens up when it does happen, and it transitions to the upside like that. There is a lot of risk that this could actually plateau and go sideways. The overall trend for this one is still to the upside, at least for the hourly time frame. We are going to be looking at support building up around 69, I believe. Let me just double check. Okay, so yeah, we are pivoting around 69. In terms of range, is actually going to widen a little bit. So this one is a little bit unclear for the Aussie USD. I don't think it's a great time to be shorting the Aussie USD yet. We just don't have a clear break for a correction to happen. In terms of Fibonacci, you're probably going to be using the 4-hourly time frame Fibonacci, which is this one. We need a break below that 69 to be sustained, right? We need to have a sustained close below 69 cents. Ideally, I don't want to rush this. I would wait until tomorrow morning if that's much preferred, if I can actually wait for a confirmed close below 69. If there's actually a confirmed close below 69, a sustained close below 69, ideally I want to get past close to around 68.75. If it does close around 68.75, then yeah, I'm expecting for a little bit more of a deeper correction for the USD. There's no rush for this one. Range is actually pretty small, so even if you go short on the break of 69, your stop losses are going to be about 50 pips in terms of target to the downside before we hit any significant support at around 68 cents. That would be tracking about 78 pips to the downside for the Aussie USD. I would wait for the Aussie USD. I wouldn't rush in on the Aussie USD at this point in time. I don't know what the impact is going to be on the US dollar from the ECB tomorrow. I think that will be the key event tomorrow. The ECB and the whole European gas situation with the Russian supply. Okay, so yeah, AU. I would stay clear of the Aussie USD. The Aussie Yen are also the same situation. I would actually wait for a confirmed close below 95 yen before I would take a short trade on the Aussie Yen. Is it a good idea to be short the Aussie Yen? I don't think so. I think it's ideal for a bounce right around 95. So we got 95 to about 95.75. Let me just I'll leave 94 because I need 94. Sorry, 94.75. Okay, so 95 to 94.75, that would be the key support you want to keep an eye out for on. That's where the short-term break happened with the Aussie Yen. That's also the base of the Ichimoku cloud. So I'm more expecting this to happen on the Aussie Yen. So I don't want to go short. I don't want to go long right now. I would wait. And when I say I would wait, this probably is going to get kicked off by Bank of Japan tomorrow. It won't be tonight. It will probably correct itself or stay close to 95 yen. And then when Bank of Japan meets up tomorrow, that's where it'll kick off. Canadian inflation rate. Yeah, let me just refresh. Just out 5 minutes ago, yeah. Year on year is what? Sorry, I'm just checking. Oh, I'm on last week's schedule. Okay, Canadian 8.1. Forecast was for 8%, slightly higher. I don't think it'll have much of an impact, but let's just have a quick look at the dollar CAD. Don't think it's market moving. 95, 10 pips, 15 pips, not really market moving. Actually, while we are at the dollar CAD, let's zoom out a little bit and take a look at the dollar CAD, because I think we're bouncing off support right now, 1.2850. Right, for dollar CAD, like the dollar yen, I don't want to be short the US dollar at this point in time. So for intraday correction, just be mindful with the dollar Canadian. Unlike the dollar yen, this is actually trading below the Ichimoku cloud. Also, in terms of Fibonacci, we actually are bouncing around 127.2%. So if you're planning to go long for the dollar Canadian, it will be limited to about 61.8%. Okay. So if you want to go long, make sure your stop losses are below 1.2850. Okay, in terms of target level, you could be aiming for around 61.8 to 78.6%. I don't normally trade dollar Canadian, but if you do want to trade dollar Canadian, you're risking around 45 pips for a potential 65 pips gain. We do still have a little bit more of a room to go to the upside for a potential retest towards 1.2940 to 1.2950. But let me just remind you, the overall trend is still to the downside for the dollar Canadian. Okay, what's next? We talk about the Aussie yen. Let me just go through the chat. Aussie yen. Swiss yen, with a request for Swiss yen. I think we take a look at Swiss yen before for this one. This was from last week or 2 weeks ago, yeah. Okay, let's take a look at that Swiss yen position. Daily swing long, could you please review with open at 140.41? Yeah, this is the trade. I'm still tracking this trade, by the way. Possible to adjust it to break even right now. So if you do want to move it to break even right now, I think it's okay. You can technically, you can move it up to 141. So if you want to move it to break even, that's completely fine. So transition this into a risk-free trade, I guess, because you can go break even or you can lock it up to 141. But ideally, you want to give it a little bit more room, maybe around 140.50. But I mean, if you're okay with this, just lock it up to break even, let the trade run. In terms of trade, I think with this one hit 78.6, so you should be scaling out of that position. Maybe scale about 1/3 out, leave the remaining 2/3 to go for 127.2. Again, with yen crosses, you are probably going to get that kick tomorrow from Bank of Japan. I don't think we're going to see that happen tonight during the US session. If we're taking fib on pound based on the 4-hourly time frame or daily, the price close below 23.6. Can we jump in? Same with EU. Yeah, I much prefer a short in the pound USD as we discussed. But in terms of daily, for it to break below 23.6, we don't have a confirmed close on that 23.6 on the daily. This is what you're talking about. We don't have a confirmed close until tomorrow morning. So just be mindful if you're tracking it on the daily. If you go by the 4-hourly time frame, I think there's a confirmed close, but the fib on the 4-hourly time frame is different from the daily time frame. But the overall tone for pound USD is I much prefer to be short than long at this point in time. It's just that it's within the Ichimoku cloud, and just because it's within the Ichimoku cloud, it just goes against my rules and stuff to actually jump into for a quick position. Does that cat have a higher inflation? Is that bad for Canadian? Not really. It's just that the inflation jump up is not too big, and I'll be honest with you, Canadian inflation, it's not really in focus. It's like New Zealand inflation versus Australian inflation. A lot more people are going to be focused on the Australian side of things. Um, Canadian Central Bank of Canada has actually been hiking interest rates, so I think they're on track on that. It's just that there's no big surprises on the Canadian side. Can I teach you how to trade with the news? Yes, I've actually run several webinars on how to trade the news. Um, Let me just, if you're new to trading, just be mindful with news trading. It's not as simple as looking at a yes or a no. It takes into account the previous numbers, the previous months, what's the context of the situation. So for right now, we are focused a lot more on the inflation number. We are focused a lot more on the CPI numbers because central banks are hiking interest rate to curb inflation. At other times when during the pandemic, for example, CPI number wasn't that important. It's just that right now CPI number is important. We basically have to keep track of what's been happening in the past 6-7 months. So we will do a session on fundamental trading, but if you don't want the hard work, then I'll just be upfront and tell you it's not going to be for everyone. Okay, I mean, people took economics as their field of studies, and it'll still take them years to actually get the whole picture. I can give you a quick summary and whatever not, but if you are going to be in news trading, you have to think longer term. News trading is not like, oh yeah, NFP is higher than expected, oh yeah, CPI is higher than expected, and then we just go along whatever without any particular reason. Because right now the Canadian CPI is higher, the UK CPI was higher, but if you take a look at the pound USD, it actually tracks lower today. It bounced up maybe for about 2 hours and then it slides down like the pound USD. You can actually tell. This is actually during the CPI release just now. So we got 2 hours of rise, and then we have a much bigger drop on the pound USD. So I don't think I can give you the information. I can tell you where to start or what to look for, but at the end of the day, fundamentals, it's not going to be as black and white as, let's say, oh yeah, price closes below 1.19, I want to go short. Oh yeah, that's a clear sign, and stuff like that. It's not as clear, like black and white, right? It's more in the gray area. You need to do your research. You need to understand the context of what the news is for, what the market is expecting. Like, for example, the Canadian number. The expected number was 8%. It posted 8.1%. What happens if it posted 8.4%, right? That's much higher than expected. What if it posted at 8%? It could be a disappointment because it was as expected as forecast, even though it was higher than the previous month at 7.7%. So that's the kind of thing you need to look into. Dollar Swiss changed its direction as Ichimoku resistance on round level of 97.30, 97.20. 97.30 and 97.20 are not round levels at all. 97 is, 97.50 is, 98 is, but 97.30 and 97.20 not really significant. But let me just take a look at it for you. So let's take a look at the dollar Swiss. We're still in the swing. That's completely fine. I'm going to leave it. Um, so yeah, let me just clarify in terms of psychological level, 97.20 and 97.30 are not key levels. They're not significant unless they used to be significant. 97.50, 98, they are significant. Could dollar Swiss changes its direction as Ichimoku lookout resistance is on? So you're probably looking at this as potential resistance. Yeah, I mean it could, but there are obviously other factors that we can track in terms of. Let me just bring up my Tenkan and Kijun. Okay. Yeah. I mean, if we take a look at the whole momentum, I think we might have a little bit of a turnaround before that. But just be mindful. We are actually within the cycle right now, so the correction is actually not done. In terms of potential rejection, I wouldn't put it blindly at 97.20 and stuff like that. I would look at other levels like a 50% correction on the fib. That's a much reasonable number to look into. If you get rid of the pivots, if you get rid of the Ichimoku cloud, where are the pivots? Pivots are resistance one at 78.6%, right? So if you bring it up, there's going to be a little bit of a resistance. Okay, so if you plan to go long, you have to wait until it transitions above the Ichimoku cloud. But the overall tone for this one, that we could see price get rejected. But for that, we need to have a confirmed close below 97 before we can actually go short. Dollar Swiss, yeah. So there was a question just now in terms of finding entry and whatever not. How to find a good entry is actually to understand the context of what the market is doing, or where the market is, where are the key resistances. Those are your first job in identifying your resistances and your support before you identify your entry. So before you identify your entry, you kind of need to figure out where your stop losses is and stuff like that. So on the case of dollar Swiss, if it transitions, I would wait. I would wait for the next, 4 or 5 hours. If it goes into the Ichimoku cloud and it fails to transition above 97.25 instead of 97.20, you need to be looking at a psychological level, which is that ends with 25.50 or 00. I would go for 97.25. If it fails to go above 97.25, then that's probably your cue that a rejection could happen. But that's not just that. We kind of need other stuff as well. We need to understand what the momentum is doing. Was there a divergence? Right now, there's no divergence on the dollar Swiss. Okay, so yeah, could it turn around? It could. Could it be based on Ichimoku? Yes, it could be based on the Ichimoku cloud if you're simply just using Ichimoku cloud and nothing else. But you could also outline this with a Fibonacci retracement. There's a 38.2% to 50% Fibonacci correction that is still in play for dollar Swiss. The correction is not done yet. We don't have any sign that the correction is done yet at this point in time. So yeah, if it transition back below 97, that would be your cue. But again, I would be more careful to assume that dollar strength has gone. I think we are in a correctional phase for the dollar strength. So just be mindful with the US dollar before you rush into positions, which we haven't talked about dollar index. Let's talk a little bit more about the dollar index. We do have support coming in around 106.50, 106. We have transition below 107, but the daily hasn't closed below 107. If we do have a daily close below 106, then that's where the US dollar could potentially get weaker. But at this point in time, we are tracking this on the daily. We're not tracking this on the hourly time frame, so we still have to see a daily close below 106 on the dollar index before we can say, yeah, you know what, there's a potentially deeper correction that could happen with the US dollar. Okay, we did talk about the dollar yen on the hourly time frame. This is the current situation on the dollar yen for the hourly time frame. If it does close above 138.25, then that's basically where my cue is to go long for the dollar yen with the stop loss at 137.75. So we're looking at about 50 pips range of sideways market condition. We are actually within this key range between 138 to 138.30. So keep a close eye out. Wouldn't want to be trading within this range. I need it to go above. Ideally, I would take the trade that goes above it. I wouldn't take the trade that goes below it because I don't like the idea of shorting the US dollar at this point in time. Not it's too early. I think a lot of people are talking about dollar weakness and whatever not. I don't think it's time for that dollar weakness yet. I think we are probably still within a correctional phase that's going on in the market, like the Euro USD that's been going on in the past 3 days, the Aussie USD, the Pound USD. It does looks like it's bullish, but I've already put out the outlook on Monday that we are expecting that correctional phase to happen, leading up to the events tomorrow, which is the ECB and the resumption of Nord Stream Pipe 1. No problem, Daniel. It's always good to see that interest there. But yeah, it's good if you do some reading on Ichimoku, especially Ichimoku Cloud. If you want to get started, do some reading on Ichimoku Cloud. But to jump into Ichimoku just by itself, it does take more than one session to actually go through a lot of the materials there. Sterling yen and euro yen. We are going to take a sterling yen and euro yen. Let's take a look at euro yen first. So I think with yen pairs right now, I'm actually eyeing for this. If you take a look at the whole general turnaround for the yen crosses, we do see a little bit of correction happening. We do see a little bit of a pickup, but I think the kickoff is probably not today. It's probably going to be tomorrow. With the euro yen, I think we do have that base around 137, 137.50 that we take a look, I think, about 2 weeks ago for this one. But if you go by the hourly time frame, this is a clear uptrend. Okay, momentum, it's still pointing to the downside. We don't have any cross with the slow stochastics as of yet. I can bring up RSI if you want to double check with RSI, but let's double check it just in case. We are below 50. We haven't transitioned above 70, so we're not in an overbought condition. We are in an uptrend though, because the RSI is actually maintaining a position with support around 40 for the RSI, so technically it is in an uptrend. So euro yen on the other time frame, it's an uptrend. We are within this cycle of correction. Let this one be done. We are probably going to be looking if there's any bounces off 140.50. I would wait until tomorrow. I wouldn't rush this. I would wait until tomorrow morning, at least until Bank of Japan announces something. I would be looking at support coming in around 140.50. That was previous resistance as well for the euro yen. So I much prefer to be long euro yen if it bounces off and doesn't close below 140.50. But I need to be sure that it doesn't transition below the Ichimoku Cloud for me to go long. Because of that, I would need the momentum to turn around. I would be aiming for 142.50. But basically, I need the stochastics to do this before I actually jump in long on euro yen. So I'll be patient. I don't think you need to rush the euro yen, because right now it's actually within a correctional phase. Might be support coming in at 61.8%, around 140.50, or it could break even lower, potentially testing 140. So there's a lot of risk right now. And plus, if you do go short, even for an intraday trade, if you do go short right now, let me show you the risk reward ratio. You are actually risking 102 pips for a potential gain of 70 pips. So I don't think it's worth it. But if you are patient, you wait for that bounce to happen around 140, 140, 140.25, 140.50. you could be aiming for that. Further progress above 142, potentially around 42.50. Risk reward ratio is going to be more than double. So I like this scenario much better. So you do have choices. You don't have to take any trade that people tell you to. Um, I like to plan ahead. I like to wait. So I've got Bank of Japan tomorrow, so I can kind of estimate when it's likely going to bounce off. I think by taking a look at the Euro yen, the Aussie yen, and I think sterling yen is going to be the same. Uh, I don't think it's time yet. There's still room in terms of momentum for this one to actually be choppy tonight and then transition to the downside. Sorry. So we could see the stochastic do this. So just be mindful with the current situation on the sterling yen. The overall tone is still strong to the upside. We are bouncing off Ishimoku cloud. So there's a lot of support right now. If you highlight where the support is going to be, it's actually going to be at around 165 to 165.25. Okay. Okay, there we go. So yeah, we know we are at support. I just don't want to rush it yet in terms of momentum, in terms of timing the market. I don't think it is the right time to jump in right now. I think there's a lot of risk involved. We're still within the cycle. We're just bouncing off 68.1.8. Price could go to 78.6. If you jump in too early right now, just make sure your stop losses are below 164.75. So you can jump in early. It's just that the momentum is not there yet. But if you do want to jump in early, you have a couple of scenarios. Just make sure your stop losses are below 164.75. Okay, in terms of target level for this one, I think you could be aiming for 166.50. Risk reward ratio is still going to be great. It's just that if you're patient, price stagnant, price is a little bit more stagnant, you could get a higher low for your stop loss. But at this point in time, if you do want to jump in long, this is where your stop loss is going to be. Okay, so you got two options. You can wait until that low becomes a significant low. And then you go in long, potentially around the same area, but you have a little bit more confidence that the stop losses are going to be smaller. So you got your options. So you can either go for a 1.27 risk reward ratio or potentially 3 times the risk reward ratio, right? You could be risking 33 if you are patient, or you could be risking 77 pips, 78 pips. But hey, I mean, if your equity can take it, and it's completely up to you when you want to jump in. You want to jump in now, or you want to jump in tomorrow. You want to jump in until there's confirmation from stochastics. Again, you might not be using stochastics. I don't know. You might not be using Ishimoku Kinko Hyo. You could just be using pivot and stuff like that, right? But there are reasons to be particular with something. But yeah, I mean, if you're planning to go long, just make sure your stop losses, your initial stop losses, is going to be at around 164.70. Okay. I use stochastics in 30 minutes to identify short-term trend. Stochastics are not used to identify trends. Stochastics are used to identify momentum per swing. So if you want to use an oscillator to identify trends, we can talk more about it next week. I'll talk a little bit more about using RSI as a trend indicator. I don't think I've talked about it on the webinar. I just finished up an article that's actually going to get posted to you guys soon on RSI, on the different way of using RSI. But one of them is actually using RSI as a trend indicator. So we can talk a little bit more about that. Maybe you want to transition to using RSI because I think that would be more suited than stochastics. Is there a class A bearish divergence on sterling yen? Class A bearish divergence on sterling yen on the hourly time frame. You are talking about this. Yeah, and this. This divergence is done. We have seen that drop. So yes, there is, and it's done. It's actually on the way. We are actually within that divergence right now. The thing is, because it's such a strong uptrend, that divergence turns out to be a correction, and that's why I still want to classify it as a correction rather than a trend reversal. A trend reversal wouldn't happen until it actually cross closes below 164.70. That's where the stop loss is located. If it closes below 164.70, then it will transition into a downtrend. That would be a much deeper correction. But right now we are looking at support coming in around 165 and 165.25. And as I say, we still have that risk to the downside. That's why I would prefer to wait on selling yen rather than jumping in too early and then risking a lot. Because if I wait, I would probably get a much better risk to reward ratio. Okay, let's take a quick view on gold before we wrap it up for tonight. By the way, just before we wrap things up, you can actually lead a Telegram channel. So if you want to join in, do join in. I gave out fundamental updates as well as some outlook on the channel. Channel's going to be posted. Contents are going to be posted in both English and Bahasa Indonesia, and there are going to be special webinars only for the Telegram channel, which we are actually going to be starting next week. So if you haven't joined in or you're planning to join in the Telegram channel, the link is going to be up on the chat, so you guys can click on it and follow through. All right, gold. My view on gold, I'll just be quick on gold here because gold, it's pretty flat around 1700. We actually lost $100 within a week. Right, my view on gold hasn't changed. I think in terms of resistance, we're still looking at 1740, 1750. We are trading below the weekly pivot level. So it's actually going to be a tough bounce for gold. It's actually easier for this one to break 1700. So if you're planning to go for gold or you're planning to have a position for gold, it's so close to 1700. I would prefer to wait for a confirmed close, a daily confirmed close below 1700, or a bounce above 1720. 1720, it's above the pivot level or the weekly pivot level. So if it does closes above that, then I much prefer to go long there. But going long on gold has a limited cap on it. Your risk reward ratio is not going to be great. It's close to 1-to-1. So you're looking at about $18 stop loss for about $16, $17 target. So yeah, there's actually a limited range for gold in terms of target to the upside. It's actually easier for gold to break to the downside. Now, fundamentally, knowing that the US is going to keep hiking interest rate, I just don't find gold long attractive at this point in time. I much prefer to go for a short in gold, and it's so close to 1700. I would just wait for a daily close below 1700. If it does happen, then I can have my stop loss there. I can go for my target level around 1680. Risk reward ratio is greater, but my risk is adjustable. Once price has progressed below support 1, I can be targeting support 2. I can adjust my stop losses just to below pivot level. There's a lot more options to the downside rather than to the upside for gold. Okay. All right, guys, that's all the time we have for tonight. So again, I think this would be our last live outlook. Sorry, with me at least. Because we're going to transition into educational content on Wednesday for the English sessions. So starting next week, we're going to talk about momentum, and then going forward, there's going to be new educational contents every week on Wednesday. But Wednesday, it's going to be more focused on educational content. So if you have any requests on stuff that you want to find out more, or maybe you want us to run through some webinars about a specific topic, you can leave some comments in this video down below. If you're watching this later, leave some comments behind, and then we can take a look at that and then plan things out for you. Other than that, good luck with the trades. Don't forget, we've got ECB tomorrow, we've got Bank of Japan tomorrow, we also have the resumption of Nord One Stream tomorrow, but with a reduced gas supply from Russia. So tomorrow's going to be a big day for the market. Expect a little bit of volatility to happen tomorrow. Okay, for those looking for Bahasa webinars, we're going to kick that off Monday. So keep an eye out on the link. Good luck with your trades, and I'll see you soon.